Hello everyone. In this video, we will analyze Nifty of last week. Okay, so the week of 12th, right? So 12th week of 12th to 16th, right? So we'll analyze the um, price action. Okay, so the price action based on the site. So while I'm actually going through the analysis, I will explain what are the divergences, right? Different types of divergences we will see in RSI. Okay. Let's take simple normal divergences because normal divergences are very easy to um, identify. Okay, so I will explain the normal divergence first. Okay, so I have actually labeled them here, so you can go through them here. So if you see this area, right? So the price was making it was going lower low, right? So it was making lower lows, whereas RSI was making higher highs. Okay, so this is normal positive divergence, right? Normal positive divergence. So, and whenever this happens, price tends to move up, right? So next price tends to move up. Okay, so this is normal. So what is normal positive divergence? Normal positive divergence is price is making lower lows, okay, and RSI is making higher highs, and price is going up. Next, so this is the same example, another example I give you, normal divergence. Here also, price made a lower low here, and RSI made a higher low, right? So this is also normal divergence, and price went up. Okay, so these are the normal positive divergences, right? Okay, and I will explain you the normal negative divergence. Okay, so this, so most of you will be very easy to identify. So this is normal negative divergence. Okay, so what is normal negative divergence? Normal negative divergence is basically the price is making higher highs, whereas RSI is making lower highs, right? So negative divergences you are considering the highs. Okay, so highs. So you have seen this highs, these two highs, right? So the high, it has made a new high here, but whereas RSI has made a lower high, right? So this is normal negative divergence. Usually when it happens, price tends to come down, right? So this is one case of normal negative divergence. Okay, so this is just an explanation. So just try to understand what are the divergences. Okay, so when will they fail? When will they occur? That's not the topic of discussion now. First, try to understand. So let's try to understand those things, and probably we will see when it will fail and when it will not. Right. So these are the normal divergences. Now let's come to the hidden divergences, right? So hidden divergences means it's quite opposite to the normal divergences. So this is hidden positive. You see what has happened? The price has made a higher low, whereas RSI has made a lower low. Okay, so they're diverging, right? So diverging means this. See, they take this trend line, is going upwards, and it is going downwards, right? So they're diverging. Basically, see, divergence is basically the two diverge, right? So here the price has made a higher low, okay, higher low. So here in normal, in hidden positive divergence, you are considering the lows, okay, lows. So price has made a higher low and RSI has made a lower low. So this is normal positive divergence. Hidden positive divergence where the price will move up after this divergence. Okay. So let's see some more cases of normal divergences. Things are not mentioned anymore here. Okay, it is here is one. Okay, so here you see this is the low, and this is another low, right? So here when RS price made a lower low, RSI made a sorry when the price made a higher low, RSI has made a lower low. That comparing to this particular swing low, when we compare to this swing low, where is RSI? Where is price? It is above this, right? And where is RSI? It is below this. Okay, so this is hidden positive divergence. So let me explain again. Hidden positive divergence. Consider this swing low. This swing low. Price has made a swing low above this level, but RSI has made a low above this swing level in RSI. Okay. So basically, you are going to compare two swing lows when you are comparing the hidden positive divergence. Okay. Now let's go to the hidden negative divergence. So here, in case of negative divergence, we are going to consider the peaks, highs. Okay. So this I'm comparing with this, right? I am comparing with this. So this mark the same high here in RSI as well. And you see this price has made a lower high below this particular high, but whereas RSI has made a high again, right? So higher high. Price has made a lower high. Okay, price has made a lower high. RSI has made a higher high. Okay, so this is a hidden negative divergence. Okay, so now let's analyze the last week's data. What has happened, right? So last week, what happened on Monday? We gapped up, right? So we gapped up almost 2,400 to 300, 400 points. After that, it rallied, right? It rallied quite high, right? So even the okay, let me go through step by step. Let's consider this level and this level. Okay, here this peak, basically this one, right? This one and this is this. So you see a normal negative divergence, right? Normal negative divergence. But the price did not fall. Okay. So that it was clearly saying that it is going to go up. Right. So it went up. So whenever the normal divergence happened, right, the price has to come down. So at least you mark this candle. See, when you see this, when did you see this? You saw the negative divergence here. At least mark this candle, right? So this mark this candle, this candle. At least price has to come below this, but it didn't come, right? So the price did not respect this divergence and it still went up, right? Now it went up and then again it saw the divergence, normal negative divergence, right? So you see the mark this candle. This is where you saw the candle normal negative divergence. But here in this case, the price came down below this and the price corrected, right? So the price corrected. So this was, I think, so it was on Tuesday. Tuesday it corrected, and at Tuesday 11 o'clock, it showed a normal negative. See, okay, before that there was a lower signal. See, at when the price showed a normal negative divergence here, price came down, and you say this, the RSI came down here. After the price fell from here, RSI came down here, and you see it formed a positive divergence here, hidden positive divergence. So it was supposed to go up, right? And it went up as well. Okay, it went up. And when it was going up, the price was going on the RSI went up fast, right? And price was not going up. So hence resulted in a hidden negative divergence. It made a hidden negative divergences, right? So price was weak here, okay, because RSI was rising fast, but price did not. Okay, so and it made a hidden negative divergence, and then price again came down, right? So it came down, it came down, came down. So you see this, okay, so price went up here and again it formed a little negative divergence, right? So here you see the price, the RSI came to the same level here, but price did not, right? So it was a weakness and it came down. So while it was doing this, it was also doing a normal divergence, right? Normal divergence, normal positive divergence. So it was anyway supposed to go up after normal positive divergence and it went up and price went back into the same range here. Okay, same range. Now see what has happened. See RSI went up here. Okay, it went up here. It went up here, and you see this at this point. There was a normal, sorry, hidden, what do you call this? Hidden negative divergence again, because RSI made a higher high, but price did not, right? So again, it was a normal line. So when you see this, right, you have to see this level has to be broken. See this candle, right? These three candles. When you see this candle has to be, the low has to be broken, but it did not. It went up again. Okay. So that is a condition you need to follow. You just looking at the hidden divergence, you should not short, right? You should see at least this cluster of these three candles, right? This is also called as a fractal. Okay, one, two, three, third candle, three candles here. It should, the low should be broken here, but it did not. It went up. Okay, so and it again went up, and you see again it made a kind of a here. Again, it made a hidden negative divergence, right? So the price RSI was higher than this, price was not when compared to the swing high, and it again came down. See, now you see these three candles, one, two, three. The price came down below these three candles and it went down. Okay, so whenever you see a divergence, mark the three candles around that peak. Okay, some even take five candles. This central candle where actually you saw the divergence, and after that you see on the left side you take one candle and the right side you get the other on one candle. So that is called as three candle fractal. Or you take three two candles on the left side and two candles on the right side. Okay, so in that case this was the low, right? So you need to see those things. Okay, so here again a negative divergence, hidden negative divergence came. So mark this candle. You see the candle, one candle left and two candle, one candle on the right. So the low was broken. These three candles low was broken and price came down, right? It came down, okay, and it again went up. Okay, now let's see this. So this again a negative divergence here, right? Okay, what has happened here, right? So you can see this, right? You can see this, mark this candle because RSI are always calculated based on the closes, right? So this candle, you see this candle, right? So you mark this candle, left side one candle and right side another candle, right? So this, what happened here, the price broke down and it came down here and it saw a normal positive divergence and price went up again. Okay, after that, I mean, you can see what has happened. Okay, so this was a crucial range where most of us were thinking that Nifty will fall. But you see this, there's a clear price action saying that whenever price was trying to come down, okay, there was a normal positive divergence and price was again going up. Here also it came a normal positive divergence. Again it went up, right? So it was going back to this range, right? The yellow lines, whatever I have marked, whenever it broke this range, it was again going back to this. Okay, and essentially this shows that the price was not willing to come down. See, ideally, when this new lows made here, right? We should have made a new low and we should have broken this low, but it didn't, right? So it come reached once and then again went up, right? So whatever you call liquidity grab or whatever, so it went up again, right? So this is how you need to apply the divergences in a live market. Okay, okay. So this is basically the analysis of last week. Hope it helps. Thank you.